All right. Hey there. What's going on, everybody? Chris Franks with TexasWest Capital. Got my friends there, Andrew and Tillman, sitting in the wings, just ready to jump out here and liven up your life. If not with the silver hat that comes out occasionally during our discussions, at least with the discussions themselves. As always, guys, we don't tell you what you want to hear here. We kind of tell you what we're thinking. Putting in multiple decades of experience across markets and TradFi and Bitcoin mining and all this great stuff to kind of help you, hopefully figure out that Bitcoin is a great, amazing thing, that you should be a part of it, and that it's going to make your life infinitely better. I believe these guys will agree with me. As always, hit the thumbs up, hit the like, hit the subscribe. Follow us. You can follow Tillman at TexasOL61 on X there. You can follow Andrew at AP_abacus, because why not, right? You can follow me at TXWest Capital. And then, of course, hey, guys, listen, if you're not already following yet, follow the Forked feed there on Twitter as well. That is the AI. That is the Observer AI fragment that writes now what has become a daily newsletter. The Market Breakdown used to be a weekly newsletter. It is now a daily newsletter. And the Fork feed does not hold back. Let's just say that. He's kind of snarky, kind of let you know what's up, a real legitimate information in there. So anyway, let me pull up the guys here. We'll see. Let's see here. We've got Tillman and we've got Andrew here. Tillman looks like he's posing for a photo shoot right there. He's like, oh. Hey.
Well, I had to find a plug for my iPad because I've already worked so much today that it's out of batteries. So I'm having to sit in a little bit of an awkward position, but yeah.
I just thought you were just trying to really lay it back there and hey, what's up?
No, I wish I was laid back. I'm actually sitting very awkwardly in a very uncomfortable chair.
Check the other door too.
Well, you only have to do it for an hour, so look at the things Tillman does for you guys. Look at that.
That's exactly right. That's what I'm here for. It. I'm here putting in the work. I need a little ab workout anyways. So sitting in a very uncomfortable chair, keeps you tight and stuff. So I'm trying to get the work.
Well, Tillman is just modeling the mantra at Arch Public. The mantra at Arch Public is "We here for you." That's the mantra, at Arch Public. Much like Waystar and their news organization. We here for you. That's a fairly deep reference to Succession, season 2, I believe it was. Yeah.
But you don't see dead people, right?
Often. Yeah.
What episode, Andrew? What season 2?
Season 2. It's probably episode 5 or 6. Yeah.
Okay. All right. I don't
they're
care.
right on
I'm
the
not going to go look,
of,
but I just wanted to know if you were BSing.
Yeah, they're right on the precipice of buying the other media company, and the head of the ATN, Tom, has to give a presentation, and they can't come to the right mantra, right? Because they were first going to say, we hear you. And then they realized, well, the boxes that we send out, they're kind of are monitoring everybody in their house already. So we may not want to say we hear you because we are literally hearing them. So we have to say we hear for you instead of we're here for you. We hear for you.
And that's, if y'all cared about that, there you go, right?
Yeah,
you have entirely too much time on your hands.
Hey, if that doesn't convince you to watch Succession, what will? Right?
I don't know what does. I don't know what does.
Hey, Succession's a good show. It's pretty entertaining for sure. The ones I've seen.
The ones you've seen.
Yeah, I get bored easily.
So anyway, excuse me. So the big thing I kind of got here. Let me kind of pull this up. I came across this article here talking about Saylor who was at the Bitwise Bitcoin Standard Corporation's Investors Day, when he said, hey, guess what? And I know Andrew's going to like this. He said, BlackRock's iShares Bitcoin Trust, which is IBIT, is going to become the biggest ETF in the world in 10 years. That's what he said. That's what he said. Now, we already know, as is pointed out in the article here, that it was the fastest, it's the fastest rising ETF ever in the history of ETFs. But then they have some kind of clapback here a little bit, you know, on that. They mentioned that VOO, of course, which is VOO, is the #1 ETF in the world, has taken in over 51 billion just this year. IBIT total assets, of course, are about 54 billion. So the idea that IBIT is going to overtake them, at least in 10 years, is not getting a lot of support. But here's the interesting thing. They're talking about, okay, so if it does, it would probably have to be like a 10-year point where stocks are just kind of hanging around or going down. So what they're saying is basically a longer-term recession, depression type thing would need to happen. And in that way, you know, that's the idea that Bitcoin would continue to gain in value even when stocks are not, right? And so what I found interesting about that is this idea that, you know, we're probably, I mean, there's a good chance we're probably, you know, coming up to a recession of some sort here, if not something a bit worse. You know, it's been what, since we had a real recession, that was 2008. That was the great financial crisis. So what do you guys think, man? Are you know,
I just did some quick math. I don't understand that commentary because from where I'm sitting, if Bitcoin's at a $200,000 price tag, it already is the biggest. You know, the price of Bitcoin, isn't that a factor in the factor in measuring how large potential ETF is? I mean, if you're measuring dollars in on an annual basis, maybe it takes 10 years. But if Bitcoin goes up to 750,000 in this cycle, what's the value of the total dollars in that ETF? I think it eclipses the value.
It also doesn't hurt that IBIT took in just a smidge under $1 billion on Monday. So they did $957 million in inflows just on Monday of this week, right? Yeah. So 2 days ago, those types of things will continue to happen. We talked about the Bitcoin ETFs and specifically IBIT a lot on the show, and you know, the foundation of this article is not daily inflows. You know, I like Eric. I think he's a good guy and a reasonable analyst. But at the same time, inflows aren't necessarily the, you know, pure foundation of being the biggest ETF in the world based on assets under management. And that's the end all be all. Why is it the end all be all? Because that's what that's what the issuers of the ETFs get paid on. They don't get paid on inflows, they get paid on total assets under management. And so you know, are we going to be at a spot where you know, like Tillman just said, Bitcoin's at 200K or 250 or 300K over the next 2, 3, 5 years? I certainly think so. And at that point, given the continued inflows, the acceleration of inflows that will happen as that price appreciation occurs, yeah, there's a world.
Well, here's the facts. Right now, if you take the price of Bitcoin to $1 million, it's the largest ETF currently today with no new inflows, zero.
Yeah. All right.
Is 10x unreasonable from here? I don't think it's unreasonable, but let's say 7x or 5x from here, you know, which would be a $400,000 price tag on Bitcoin. That coupled with the inflows would absolutely make it the biggest if it continues to grow at the rate that it is. I mean, you're talking about a 10x difference right now. Assets under management is $592 billion for S&P, and it's 52.8 billion for Bitcoin, the IBIT Bitcoin. So number one, it's deceiving in the fact that the price of Bitcoin could make that a reality much, much quicker than 10 years. Number two, you're only measuring one ETF. Don't you think you should measure the entire Bitcoin ETF environment? Like, why just IBITs? You know what I'm saying? It's the same product across. If there was 5 different S&P ETFs, we'd be measuring the collective number behind those ETFs, not just one specific ETF.
Yeah, I think they just focused on IBIT because that was what Saylor said. You know, at the thing, Saylor said, listen, IBIT's going to become, you know, the greatest, the largest by itself. And I think, of course, you know, as with everything in life, you know, when there is a kind of a set way of understanding, people have a hard time getting beyond it, right? And so when we look at ETFs, they basically look at the largest ETFs being those that are more broad-based, right? Not just single asset. And I think that's also something that's difficult for those who are entrenched in ETFs and the ETF way of thinking, you know, to kind of get beyond that idea that just a single asset ETF could, you know, be larger than a broad-based ETF.
But
you know,
it's still
that
lazy.
magnitude.
It's still lazy math. I mean, if you think about it, like we've got 50 billion came in 228 days into IBIT. $50 billion came in 228 days. To say that it's going to be the same growth year after year for the next 10 years and it's not going to accelerate is lazy, in my opinion. And to feel like Bitcoin's price is going to be stagnant over the next 10 years is lazy. Like this is a nonsense article as far as I'm concerned.
So that's what we think of it, guys. Yeah, you know, again, well, if we just look at it, you know, we can look at the fact that Bitcoin is around the 5th largest global asset by market cap now. I believe it was last week. This is what we were going to talk about last week before before the lightning hit the substation and knocked out the power here for most of the day. That sucked. 15 minutes before the show. But anyway, but yeah, so, you know, market cap at 94,000 of, you know, 1.86 trillion just sits behind gold, Apple, Microsoft, and Nvidia. And I mean, you know, if we're thinking, hey, we've still got further to go this year alone, if we think maybe we're getting 150, 180, 200,000, Lord, heaven forbid we get 300,000 or something like that. I mean, all of a sudden, I mean, how do you not take it seriously anymore? Yeah, people are still trying to fight it, right?
People don't take it seriously, in my opinion, because they're making too much money with other things. It's the same old thing with like, why do people love XRP? Well, because they've made a lot of money on XRP. Why do people love Algorand? Because they've made a lot. Anything that makes you a lot of money, you have bias towards, right?
Yeah.
And so traditional markets, a lot of people have bias towards traditional markets because they've made their entire fortune off of traditional markets. So there's no reason for them to go out and look for something new because the dinner table's full every night, and they're going home every year with profits year after year at a rate that by anybody's measurement is going to lend themselves financial security and all the. So if it ain't broke, don't fix it type of a thing. A lot of people look at Bitcoin like that. I don't need it because I don't need it. I'm wealthy enough. I'm doing other stuff that, you know, I'm a real estate mogul, or I've got a, you know, high income job like a doctor or certain, you know, they don't look at it the same way. But every human being has one thing in common. Their fiat is eroding every day underneath their feet. Yeah. So if you understand that, you understand why you should own Bitcoin. You know, Bitcoin should be in everyone's portfolio just as a hedge against inflation. Period. The end. If you see no value in, you know, its growth potential, but you just see it maintaining its purchasing power, no growth, just maintaining, you're ahead of the dollar, right? The dollar cannot maintain its purchasing power. By definition, it loses purchasing power every single year. And the further you get into the inflationary curve, the more it loses its purchasing power every year. More and more percentages are piling up. So, you know, if you take that into consideration, there's no reason why everyone shouldn't own a little bit of Bitcoin, because I don't think anyone can argue, and if they do, I'd love to have that argument, that there's a better instrument to hedge against global inflation. I don't see one. I don't see one not only that exists today. I don't see one that's ever existed. I think this is a new type of instrument as it pertains to measuring global inflation. Period.
Yeah, yeah, and it was Fink that earlier this year in Davos, right? We talked about this a few times, I think, but he was talking about when you're looking at widespread institutional allocations. He said, 2 to 5%. Bitcoin's looking at $700,000 a Bitcoin. And we sit here and we continue to watch these things happening, and we've got Saylor with strategy doing his thing, which, by the way, he just locked up another chunk. We've got Mahler's coming in with what's that called?
SoftBank.
But what was it called though? 21 Mahler's.
21. I don't know.
21 Capital, or it's something like that. But that's the move with
21 shares. 21 shares is what it's
is it
called.
21 shares?
That's what I'm deciding to call it if it's not 21 shares.
But you got them. They're coming in with what, 400,000 or 500,000 Bitcoin? No, 40,000 Bitcoin, was it? What was it? I don't even remember now.
Not a small amount, and they're going to continue to buy. They're going to again use the Saylor model. They have proclaimed that their model is superior to Saylor's model. They put out paperwork and some white papers and some case studies associated with that, where their model ticks off all the proverbial boxes and his ticks off about 2/3 of them. It understand too that behind 21 shares, and I'm pretty sure it is called 21 shares. Understand behind that is SoftBank, is Cantor Fitzgerald. SoftBank is, SoftBank doesn't have a problem blowing $40 billion on WeWork a decade ago and it going effectively to zero, right? Yeah. So what do you think their bandwidth is for buying Bitcoin over the next 3 to 5 years? So that's now just strategy and 21 shares that are doing this at scale. There are more corporates coming that are going to do it. For example, I know that there's a big corporate that's on its way.
Yeah, I saw you teasing that.
Yeah, and so, what if, $5 billion a year for the next 5 years, so an additional $25 billion, or maybe it's $10 billion a year for the next 5 years, and it's $50 billion, is not a meaningful, doesn't even make a dent in both their cash position and in their ongoing cash flow position associated with buying Bitcoin. So for all intents and purposes, it's a meager percentage of their overall operating yada, yada, yada. So if another 50 billion for a corporate of that size is really nothing, again, there's going to be more and more and more of this. So I heard a statistic yesterday from Eleanor Tourette, formerly Fox Business, now of Crypto in America. And we talked about on this show, corporates coming into this, Bitcoin standard world. 6 months ago, there were 34 or so publicly traded companies that were doing it. Maybe about 2 months ago, we said on the show that had gotten to 70. As of last week, the number is now 94. So there's 94 companies that are executing some sort of Bitcoin strategy to hold on their balance sheet as a treasury mechanism. And so,
and that's Haugen, just in the U.S., right?
Yes. And Matt Haugen at Bitwise is not wrong. It's not just a trend. It's a mega trend. So that number
it's not just a mega trend. It's a mega trend that feeds on itself in terms of intensity, because there's a race, right? There's only so many of them. It's not like the companies are buying something that has no scarcity. They're buying something that has absolute scarcity. So when you see this piling in, there becomes, it's just like in retail, right? You get the price you deserve. Well, in institutional framework, that is competitive advantage. So the people who don't have as much to offer, you started out the segment by going, traditional why do people not buy Bitcoin? Why don't they see the value? It's because they don't have to. They've got a primary business. They've got primary income. Same thing with corporations. If you're a corporation that's, Apple, that you're selling stuff every day, you've got products on the shelves, you've got this incredible cash generating machine or business, you really don't see Bitcoin as that much of a shiny object in the room. But if you're a company like GameStop, who has a dwindling market share, less and less revenue every year, you're on the downside of the decline of your peak business, then it becomes the only option. If you're a company that has a ton of real estate value, but no way to capitalize on that real estate value, the question is that real estate, are you better having the equity in those pieces of real estate, or are you better leveraging that equity into something that has a greater growth potential? And I think that the where you fall on that spectrum has everything to do with how much money you're making in the real world versus not. And to Andrew's point, I think that, we have just seen the tip of the iceberg in terms of companies come on. But I also think that the people who need it the most will have to compete to acquire the most. They will go into it like a Michael Saylor's attitude of, we can't have enough. We're going to buy every single top because we get the most leverage and bang for our buck. And it's a non-recourse debt. It's just convertible notes. So there's no downside to this at all for a company that knows how to do it and structure it properly. The acceleration that we're going to see in the next year, to me, is the story. I think we're going to see a lot bigger of a pop than we could ever even imagine, because I don't think there's any indicator right now that we can point to that says this is how many businesses out there need it. And I think that if you go out there and just start looking at companies and what their revenue looks like compared to 10 years ago or 5 years ago, there's a lot more companies out there that are struggling to recreate themselves or recreate their past revenue streams than we even know about, to be honest with you.
Yeah, and so that brings up this this next point I kind of wanted to talk to you guys about. So I've seen the suggestion that MicroStrategy, they've been issuing all this debt, doing all this, but what they should do is take cash, buy these companies that are just pouring, that are just printing money, basically. There's a whole bunch of companies, zombie type companies in Japan where they're just boring nothing companies, but they're just shooting out cash, constantly producing all this cash. And to do that, to buy up, because the idea is, okay, so we get up here and we're kind of getting to this point that maybe there's not going to be as much Bitcoin really to buy anymore, right? As it continues to go into the coffers of like strategy and the ETFs and whatnot. And so the idea is, okay, should MicroStrategy or strategy then just go out there and just push that price up, just go start, devil doesn't care what the price is. We'll buy it on the exchange just to force that price up. And then along the way, because that's going to return a greater NAV, as that price, the value of the Bitcoin that they're holding, because that's all they're interested in, right? They're not interested in the price of Bitcoin per se, or what they're going to gain that price. They're interested in NAV. And so by doing that,
what has more risk, acquiring cash flow positive companies or buying Bitcoin and waiting? Yeah. Buying Bitcoin and waiting is the no-brainer here.
The idea is to buy the companies and then use that cash from the companies rather than issuing more debt. That was the idea.
Well, you could do that, but again, going back to risk dynamics, if I don't know a company out there, if you're producing that much cash within a business, wouldn't it be better to reinvest that cash into the business that's producing the cash? Like, it doesn't make sense to reinvest profits from a profitable business that doesn't own market share to the degree that it could. You would want to buy the market share because it's producing more cash than Bitcoin is. So that's faulty logic as far as I'm concerned. I think you buy Bitcoin when you're not producing cash, when you have a company that's stagnant and you're sitting on cash that's losing between 8 and 19% a year, depending upon what inflationary number you believe. That is a riskless proposition. Whereas taking a company that is kicking butt and taking names, if that logic holds true, why wouldn't those dollars be better spent getting more market share in those cash producing businesses?
Yeah.
See what I'm saying?
Yeah, exactly.
Whereas the debt that they're issuing has no recourse.
Right.
It's literally nothing. There's no risk. Bitcoin could go down to $2 a coin, and Michael Saylor isn't going bust. There is no liquidation price. He's playing with margin, but the margin's recourse isn't repossession.
Yeah.
So it's the infinite money loop. And if I were Saylor, I'd be focusing on, if you're going to buy businesses to reinvest, go buy GameStop, because they don't know what the cash value of what they're sitting on represents if it's applied to Bitcoin. You could buy it almost on cash value, right? If you go to GameStop right now and go, we want to buy the whole thing, everything, what's it worth? It's worth what's cash in the bank plus the returns that it gets on the locations, and plus a multiplier, right? So let's say you got 4 billion in cash and you're doing 100 million a year. Say you want to get a 12x on the 100 million a year. You got 1.2 billion plus the 4 billion in cash. Purchase price 5.5 billion. Some multiplier of that. Whereas if you're going and buying a company like that and then taking that $4 or $5 billion value and leveraging it into Bitcoin in a non-recourse fashion, to me, that's a much better strategy than going and buying cash producing businesses and cannibalizing that cash to essentially buy Bitcoin when you could be growing those businesses in terms of market share.
So it should be noted, and this is important for programming, a couple conversations with Tillman before this show, he was just as animated. I do know that he often drinks decaf coffee. I'm certain he had a couple cups of actual caffeinated coffee today. The energy level is very, very high right now.
I can tone it down a little bit, but I have, you know me too well. I'm on vacation, and I have what they gave me, which is not decaf.
I don't. It's like Kramer. Hey, I can have as much coffee as I want to have. I get to have I get one every day. I don't have. You can't stop me from having coffee. I can have coffee whenever I want to have coffee. You can't tell me what coffee. I can have coffee. I try to stay real fast down the sidewalk. I can have coffee whenever I want to have coffee. You can't tell me when to have coffee.
I try to stay away from caffeine because I like it to keep my blood pressure low. But when I need it, if I drink a little bit, it's very potent. It affects me a lot. So I'm sorry. I'll try to tone it down a little bit.
So you say you've only had a few sips this morning.
Speaking of weirdness, why are you guys so close to your cameras? Back up a little bit. We don't want to see y'all's faces that close. I mean, should we just get right here, or just all three? Just hey.
I'm trying to get the light thing. And for me, it's the light thing, right? Because I've got this is a huge office. It's like 600 square feet. And I've got these.
You can adjust it. You can adjust it on your end to where the way that the screens are set up that it kind of pulls back. I mean, I know you could do that.
No, not this right here. This is the way it is, man. This is what you get.
No. I know how StreamYard works, man. Don't think that you're the great and powerful Oz and nobody can see behind the curtain, dude.
Hey.
I feel like this is a conversation we should do pre-air. I feel like we're wasting people's time. Let's get back.
Well, if you guys would show up more than 2 minutes after 11 a.m., we could do that. I'm just going to throw that out there.
Yeah, because we do a lot of that when we do show up early. We sit there and do nothing and laugh at each other for 15 or 20 minutes.
We have great conversations to get us primed for the show. Come on now. But anyway.
By the way, something to mention about IBIT, going back to that ETF, it is notable that on the day that they had $1 billion in inflows, just a smidge underneath that, a good portion of the other ETFs had small outflows.
Really?
So think about the bifurcation of BlackRock customers versus Fidelity customers, Bitwise customers, those types of customers. So that's the difference between institutional and retail right now with Bitcoin. For years and years and years, retail was more excited about Bitcoin than institutional was. That has flipped. That has completely flipped. Institutional is much more engaged right now. So another point of reference is that ARK had inflows as well on Monday with IBIT. Those are two much more institutionally focused spot Bitcoin ETFs versus, again, Bitwise, Fidelity, and the like, right? So you've got those that have, outflows that are very retail focused. Fidelity and Bitwise certainly are. And then ARK and IBIT and BlackRock, very, very heavy institutional money was what their flows are.
If you look at who's buying those ETFs, like Millennial Management hedge fund, $2.6 billion in IBIT ETFs. Brevin Howard, $1.4 billion in IBIT ETFs. D. Shaw and Company, $1 billion. These are all hedge funds.
Yeah.
If a hedge fund's going to get into Bitcoin, and they all have to, because they're all return driven, the question is who's are they going to buy? BlackRock's, I think, at the top of that list. I think they'll continue to be at the top of that list. But billions and billions of dollars are going to flow into these ETFs. And I like what Michael Saylor says things sometimes, and if you listen to what he's saying and don't assume anything, then there's these brilliant nuggets of truth, right? And one of those things that I think a lot of people misunderstood or didn't understand. In fact, I know for a fact a lot of the Bitcoin community, because I heard it from them, when he would say, "I buy all the tops," they took that. Bitcoiners took that as he's so committed, he doesn't care what the price is.
Mm-hmm.
That's not the truth. That's not why he's doing it. He's doing it because he gets the best borrowing leverage at the highest price. It's literally not because he's an idiot and he's thumbing his nose at all financial wisdom and saying, "I just buy the tops because I'm that good." That's not what he's saying. He's going, "I've created a mechanism that allows me to borrow money. I get to borrow the most amount of money when my share price is the highest. My share price is the highest when Bitcoin's price is the highest. So therefore, I get to buy more Bitcoin the higher the price of Bitcoin it goes." He's buying all the tops. He's also said this race to owning Bitcoin from a hedge fund perspective. He said, "Listen, I believe Bitcoin will eventually be the S&P plus 12 to 18%. That is that you can't ignore that. That's huge. It's like it will be every single hedge fund will have to own a piece of it because they won't be able to keep up with the returns any other way. So it's one of those things where he sees the future for really what it is, and he's able to articulate that, but you have to stop and really listen to what he's saying, right? It's different than what we assume.
Yeah. I mean, and then it's easy, as retail to assume retail thinking because, that's where we're at, right? People approach markets and approach life from where they're at. And this is something I always try to, teach people, especially our students over the academy and stuff like that, is that, the hardest thing you have to overcome if you really want to advance, not just in markets, but in life, is starting to view things outside of what you're used to, outside of your normal, outside of what your day-to-day is. And it's really difficult. But
the magic is understanding and putting yourself in the same shoes as the people who are doing it. So Michael Saylor, the reason why he's doing it is because he was desperate to do it. That's the truth. He had no other way out, which should tell us every other company that's in that position is going to have the same, desire to get out of it. And when you talk about what Bitcoin can be as a shining star, he said it in one of the interviews one time, and it really hit me like a brick. Somebody asked him, why is this debt issuance for Bitcoin become so popular? How are you doing the volume? How are you raising this type of money for people to buy your shares essentially, or buy Bitcoin through your shares. And he said something brilliant, and no one talks about it. He goes, I just looked at the reasons why most people can't own Bitcoin, and I then elevated the offering to the people who have the deepest pockets. So he said to himself, there's entities out there that physically can't put Bitcoin on their balance sheet because it's against their charter rules.
Yeah.
How much money is in that? Like, how many people exist out there that have that problem, and how much money do they control? Well, the answer is trillions of dollars. And so he's just giving the market what it wants, which is exposure to Bitcoin without owning Bitcoin. And that product that he's created is giving them that. And so I look at this as just a simple supply demand. Like, there's demand in the markets to have exposure to Bitcoin. There's a lot of rules that keep people from getting that exposure to Bitcoin. Well, create products that don't violate those rules, that get them exposure to Bitcoin, and you're going to have a lot of success. You're going to have a ton of customers at your door beating it down, going, give me money, or giving you money. And that's exactly what Saylor's got. And so why would he even change until that money runs out? I wouldn't, until he can't raise more debt financing. Why would you go anywhere else? There's no better place. This is a huge swath of the world saying, you have given us a product that we see a lot of value in. Now we're going to show you that by buying a lot of that product. It's just that simple. And a lot of people kind of think it's magic, but it's really not. It's just it's the same thing that a grocery store does. If there's a new candy bar that comes out that everybody wants, here's a good example. Prime Energy drink. How quickly has Prime Energy drink found itself on every shelf, in every convenience store, in every grocery store, everywhere? It's everywhere now. Why? Because there was enough demand to warrant that. The shelf space in a grocery store and a convenience store is the most valuable thing they have. And it is absolutely based on analytics when they put anything else on the shelf. And it goes to, where do they put it? Do they put it on the bottom shelf? Do they put it on the right side of the store? Do they put it on the entry in a kiosk? There's a million different things that they analyze and study for that. But at the end of the day, it's, will people come to my store and spend more money if I have this product? And Michael Saylor has found the product that corporations want to have, or that they have to have in order to gain exposure to Bitcoin. So it's something that, they don't, he's just giving the market what they want. Bottom line.
Yeah. So, Andrew, we were talking about GME earlier, GameStop. They had the recent vote about putting Bitcoin on the books. They've got a little bit of cash kind of sitting there. Do you think that we see in their next filings coming up here that they've bought Bitcoin?
If I had to guess, they'll end up, Ryan Cohen will end up attending the Bitcoin conference, making some sort of special appearance. It'll get announced the day before, or the day of the first conference, or the day of the second, when it's, general admission. And that's when they'll announce it. It'll be a big splash. That would be my guess. You don't put it in your charter. You don't make adjustments. You don't talk about it in a quarterly report. You don't talk about your cash position and Bitcoin. You don't take pictures with Michael Saylor and then not do anything.
Look at Grant Cardone recently, right? I mean, he went with his brother Gary, and Gary took him to speak there with Saylor. And then he gets off, he leaves there. Next thing you know, he's got a fund out there, this Bitcoin real estate fund. Yeah. They oversubscribed on that. And now he's got this, he's making waves right now, talking about wanting to use this new fund coming up here to acquire another 1,000 Bitcoin, along with that, I think it's 200, I can't remember how many.
You don't, again, to my point, because Grant Cardone took a picture with Michael Saylor. You don't take a picture with Michael Saylor, make it public, put it on your feed. Now it's all out there, and then not do anything with Bitcoin, because your organization, Bitcoiners, are, let's just say, loyal. That's the best way I could say it. Your shares will get hammered if it finally comes to light that oh, pictures were taken, commentary, it was all a ruse, and effectively it was a rug pull in the end, GameStop, the share price will get absolutely bombed. So you can't afford to do that. So it's just a matter of time. Truth of the matter is that the machine that is corporate America, that's a public company. You've got to make disclosures. You've got to update documents. Those documents have to be filed with the regulators. All that stuff has to happen. Votes have to be taken. Yada yada yada. You can't just push go at some point and buy a bunch of Bitcoin. And in this world associated with the regulatory structures that exist, there is no version of ask forgiveness as opposed to asking for permission. That doesn't work. You get in trouble. So it takes time, but my guess is that we'll find ourselves. It's not a coincidence that there's a bunch of filings associated with earnings and the like right around the Bitcoin conference timeframe either. That's also something to note. Mm-hmm.
All right. So I guess the big question then is, a lot of people are concerned that we're seeing now and are likely to see much greater in the future suppression of actual Bitcoin price by paper Bitcoin, similar to what people, argue has happened with gold. What do you guys think about that?
Well, we've covered this. Yeah, go ahead, Andrew.
I would say this. I would say, we talked about this maybe a couple of weeks ago. The world of Bitcoin and how we look at it and how we evaluate it and price adjustments to the upside and the downside over the next 3 years is going to dramatically change, right? So we have options that exist now. We have futures that exist now. We're still waiting for meaningful volume to come to, for example, IBIT options, right? Options associated with both BlackRock's ETF and I think Fidelity's ETF. Those are going to come online. So there's going to be layer upon layer upon layer upon layer upon layer of Bitcoin access, Bitcoin volumes, Bitcoin volatility, and the ability to extract alpha from Bitcoin that not is spot price, that is different than spot price, right? So Coinbase is about to put out a product where you can generate 8 to 12% yield on your Bitcoin, but essentially what it is they're trading your Bitcoin versus the futures price, right? Because Coinbase is now dealing in the perps and future space as well. Right. So they're playing a little bit of an arbitrage play, and they're saying we'll get you 8 to 12% yield on your Bitcoin with that play. Right. So again, they're not playing spot price. They're using an arbitrage futures versus spot play that's happening everywhere. That trade is only going to grow. Right. So the futures markets, the options markets, the ETF options markets are going to 10 to 50x over the next 2 to 3 years. On top of that, you're going to have debt instruments associated with Bitcoin. So Bitcoin bonds of some sort, those will command some sort of trading landscape and end up being a market. And at some point, probably in year 2 to year 3 going forward of that time frame I laid out, you're going to have mortgages associated with Bitcoin. So there was a post made by somebody, not even somebody that I necessarily recognized in a meaningful way, that said, over the next extended period of time, if I have the ability to trade IBIT and FBTC options, I have the ability to trade arbitrage on futures and spot, I have the ability, on the lending side, swaps, whatever it happens to be, why would I spend any time on meme coins 2 years from now? Why would I spend any meaningful time in that crazy market when there's potentially, there's MicroStrategy, there's their preferreds, there's MicroStrategy option, there's all manner of the ability to play Bitcoin price action, leveraged or not leveraged, across what will end up being 12 to 25 instruments over the next 2 to 3 years. So why play in the meme coin world? The meme coin world is probably going to go away because
You're breaking hearts,
all
man.
the capital is going to press into that space. All the meaningful capital will have, you know, a few $100 million goofing around in that other space. But again, all the meaningful capital is going to move into that type of arbitrage, that type of spot, that type of option action in a huge way.
Well, I mean, it already has. We saw 8 times the dollars traded in the Bitcoin futures market last week than we did in the spot market. It's already eclipsed in terms of the total value of the Bitcoin ecosystem compared to the total value of the spot ecosystem. And that, like Andrew's saying, is only going to get more and more. I think we've used this reference in the past, but right now we've got a slot machine and a gas station right across the Nevada line. Vegas hadn't been built yet. Vegas is not going to be built on spot. Spot is one slot machine. Vegas is going to have 1,000 varieties of how to, quote, play the game. And that will become the dog and not the tail if it hasn't already done so. So yeah, people. But here's the good news. You want the good news with that? Bad news? The good news is that the spot can't be killed. It can be completely manipulated, but it can't ever be completely controlled. So, for example, if I'm a big corporation, I want to drive the price of Bitcoin down. Well, what do? Well, I have a choice, right? I can sit there and wait for the dip, or I can go short the piss out of it in the futures market. And I can make money on the dip down. And it's like if you take a stock chart and you take all the volatility that happens on the way up and you took that line and you straightened it, it'd be more than double the length of the line by a long shot. It'd be a lot more movement is in that volatility. So what are they going to focus on? They're going to focus on that volatility. That's the machine that they want to control. They don't necessarily want to control the price of Bitcoin for all eternity like silver and gold, because silver and gold has a finite ceiling. They can't put more money into it indefinitely. Bitcoin, you can. There is no limit. They can grow the price of Bitcoin to infinity, and it really doesn't mean anything to them because they just want the activity. They want the transaction. So whether Bitcoin's at $1 billion or whether it's at $100,000, for them, it's really not the priority. The priority is how do we get more and more people to play the game? And what possibilities can we work off of based upon the inherent intrinsic value of the base asset that we're building on? And Bitcoin has advantages to every other asset in that category. So to think that we even could put a cap on it is pretty short-sighted. Like literally, we as humans think in our lifetime, but think 300 years from now what the price of Bitcoin could be. Seriously, I want you to think about that. Like it's beyond anything that anybody could ever even pretend to guess.
So real quick here, you made a point there. You said that Bitcoin can continue to go up indefinitely, the price, versus gold and silver can't. For those that aren't understanding what you mean there, can you flesh that out a little bit? What you mean?
Yeah, absolutely. Gold and silver's mining costs are tied directly to inflation rates. So the cost of producing 1 ton of gold is very, very uniform across the globe. There's not much delta in that. Whereas the price to create Bitcoin, there's an extraordinary delta in that. If you know what you're doing, you can create a lot more Bitcoin and at a lower cost than someone who doesn't know what they're doing. They're going to create less Bitcoin with a higher cost. That competitive field will produce more losers and more winners than me saying tomorrow I'm going to open up a gold mining business. If I opened up a gold mining business, there's really nothing that I could do that's different or extraordinary compared to what Newmont Mining is doing, right? There is no competitive advantage that I have. Whereas if I start mining Bitcoin tomorrow, I absolutely can create competitive advantage against the largest. I can produce Bitcoin on a cost per bit better than some of the publicly traded mining companies can. And that is the competitive nature that will always keep Bitcoin at an infinite price appreciation curve. You can't put a price on it, because here's what I would say to you. Fast forward to the end of that curve. How many miners will be plugged in, and how much electricity cost will be being spent for what size of Bitcoin? What's the block size down to, nothing basically? And you've got this incredible infrastructure fighting over that quote nothing. Well, that doesn't work unless that nothing goes way, way, way up in price. Whereas that does work in gold. I can be a profitable gold mining company forever if the price of gold stays at $3,000. I can't say that for Bitcoin. There's this competitive curve I have to stay on in order to produce at an advantage. And that's unlike anything that we've ever created in human, history. Does that answer your question?
Yeah. No, I'm just, again, I just wanted to make, because I can see the comments coming already. Well, what do you mean you can't, gold's got some ceiling on its price and Bitcoin can go up? What do you mean, And
well, here's why it has a ceiling on it. The price of gold has a ceiling on it because I can back into the math of how much it costs to produce. And I can say to myself, this is not, it's better for me to go mine the gold myself than to buy it from this company, because their price is disproportionate to the cost of production. Bitcoin's cost of production is on the same rate as the price appreciation. The halving makes it harder to get Bitcoin and more expensive to get Bitcoin the longer the time frame that you're looking at. That's not the same as gold. In fact, some would say that the productivity of gold should become less and less expensive to get, because we're getting bigger and bigger pieces of equipment, more fuel efficiency in that equipment. Like, the nature of that business should be driving efficiency into the cost of production. The nature of the Bitcoin, you can't drive efficiency. By definition, the halving is cutting your revenue in half every 4 years, period, the end. You can't avoid that. So it's a very, very different machine than trying to go out and dig a hole in the ground and getting Bitcoin. The barrier to entry of digging a hole in the ground and getting gold is very, very low. You just buy a bunch of equipment, you find the gold and start digging.
If we want to talk about price in both short term and long term, let's forget about short term for a second. But I think long term, and I think this is probably a little bit of Larry Fink's thesis when he talked about 500 and 750K. I think it's reasonable for us to assume that at some point Bitcoin's price catches up to Berkshire Hathaway's Class A stock price, right? So Berkshire Hathaway's Class A stock price is at 800,000, right? So, I mean, that's filled with insurance companies and railroad tracks. Yeah. Like, do we think at some point Bitcoin moves beyond that type of number? I think we do. The timing on it is a different conversation. But at the same time, it would make sense that a company filled with insurance companies, railroad tracks, and billions upon billions in cash just sitting on their balance sheet is probably, less valuable than Bitcoin and where it should go. So, sit back, use tools to stack as much Bitcoin as you possibly can, and enjoy the fruits of your labor. It's the writing is on the wall. The writing is on the wall in terms of the pace and speed picking up of Bitcoin adoption, at minimum in corporate treasuries and on balance sheets. So we're where we need to be.
If you just I like to think about it in statistical format, but if you own 21 Bitcoin, you're 1 in a million.
Mm-hmm.
Literally out of the global planet, there's 8 billion plus people. You're 1 out of a million people, and that's generous. You're really probably 1 in 100,000 because there's a lot of people that don't even own. There's vast majority of people don't even own one Bitcoin. So if you get yourself into a place where you own 10, you own 20, you own 21, you literally own 1/1 millionth of the entire market. You can't say, like, the value proposition that rings in my head as a bell makes me say we are dirt cheap. That's how it makes me feel, right? Because to own 1/1 millionth of an industry that's global, you would have to spend millions and millions, tens of millions of dollars. How much would it cost you to own 1% of Apple? How much would it cost you to own 1% of Tesla? How much would it cost you to own 1% of Nvidia? It costs you a hell of a lot more than it would cost you to own 1% of Bitcoin at this point. And that's, 21 Bitcoin at 85 or 95K, a couple $1,000,000, and you can be 1 in 1 million. That to me says that we're very undervalued. So the question then becomes, okay, if I was going to spend this, what dollar in my mind starts to make me feel hesitant about that? What if I had to spend $21 million to get 1% of the supply? That still seems cheap to me. You see what I'm saying? Like, comparatively speaking, I can point out the window right here. There's developments that are being constructed for $250 million across the street. Would you rather own that development for 250 million or for 21 million or for 2.1 million own 1% of the Bitcoin supply? It's just, we haven't even scratched the surface as far as I'm concerned.
By the way, that screen name Sats McGee is outstanding. I mean, that's a strong
I didn't
choice.
see that. Is that in the comments?
Sats McGee, yeah. And your shares of Bitcoin can't be diluted. See, it's Sats McGee. There's a different version of that that's not PG rated, but for all intents and purposes, that's a strong one right there. I'm appreciating it. Listen, we covered a lot of ground here today, and you guys are getting a version of Tillman that I get from time to time, the caffeinated version, and it's there's a lot of energy there. There's some strong energy. A lot's going to get done today. There are often times where I've got to call them and say, hey, what are you doing today? I'm over here doing some stuff. Let's do some things together, and I got to wake him up. You know what I mean? But not today. Not today with the caffeine. The caffeine is your wife's birthday today or tomorrow or the day before? Just happy birthday! Shout out to Megan.
3 days ago, 27th.
Okay, yeah. So
well, happy belated birthday to her then, keeping you straight.
Yeah, she loves nothing more than the beach, so this is why we are here.
Oh, nice.
Leading her to the warmer weather. When I left Colorado, it was snowing. So welcome change. Even though I am a sweater and I don't particularly care for the heat or the humidity, I'm here to serve.
Also, it needs to be noticed on this show that a gentleman by the name of McFadden has no game, can't compete, and I'm just waiting for the competition to show up, but he has no game. Wanted to get that on the record for us.
My middle son is named McFadden, and he has a very rivalry-based relationship with Andrew. Andrew is McFadden wants to start selling for the company, and I told him, I said, listen, it's family business. You're absolutely welcome, but I'm not going to be the test giver. Old Andrew, you're gonna have to call him up and put the sales pitch on him and the service pitch on him strong enough to where he goes, you're ready. So now McFadden, every time he gives me ladies like, who does Andrew think he is? He's not. I'm gonna whip his butt when I see him. Last night when we got out of the car, he goes, does Andrew know I have $400?
Oh my God! You say 400? That's funny. My son just socked away $400 the other day as well. So
how old is your son?
He is, gosh, what is he? He just turned 14.
Yeah, so is mine. So they have,
Yep.
$400 to a 14-year-old is you're
Sounds
untouchable,
like
baby.
it could be $7 million to them for all they know.
Well, he came to me the other day. He did some work around the house, and I was paying him. And I paid him. He goes, "Can you take me to the bank?" It's like, "Yeah, I'll take you. You going to deposit your money?" He's like, "No, I'm going to get ones." He just wants a stack of 400 ones.
Did you let him know that if he does that, there might be some questions about what he plans on doing
Yeah,
with
there's
those
some
ones? I
questions.
mean,
No, we're keeping it innocent over here in the Holloway household. I don't even want him to know that world exists. But yeah, he wants the stack. He wants to whip that thing out and fan it around and flaunt it in Andrew's face to keep him on his toes.
Like I said, if he's carrying around a stack of 400 ones, he's got no game. No game. Zero game.
Trust me, this kid's the most handsome kid. He's got game. In fact, there was a bunch of girls on Instagram or something they were talking amongst their team, and they posted the chats publicly, and it was like, of all the hockey players in this valley, who would you date? And McFadden was at the top of the list, babe. So you're not going to convince him he has no
proud
game.
dad over
He's
there.
heard
Very
it directly
proud dad.
from
You
the
can
peers.
see it in your face.
Well, it's not a problem that I had. I'll put it that way. I was not that way with the ladies.
Yeah, I'll tell you what. But to be 14 again, man, and to think that $400 is just top of the world stuff, man. I wish that doesn't even pay my electric bill here in a month. I mean,
well, listen. I remember when I was 14, I'd get a nice pair of shoes, and it was the difference. Like I was riding lightning for a week. I mean, it was like the greatest. It made me feel like I was the king of the world. Ignorance is definitely bliss. I tell the kids all the time, enjoy your childhood because adulthood sucks.
It's a trap. It's a trap. Don't get into it.
That's gonna. So inside of our company, whenever there are moments like this, I'm like, all right, that's going on a T-shirt. Does Andrew know I have $400 is going on a T-shirt? For sure. For sure.
If you do it, we need to see it. You need to put it on here so we can see it. Oh man. Hey, listen, had a lot of fun today. Thanks guys so much for showing up. And Tillman, even though you're on vacation there, doing things for the wife for her birthday, I appreciate you showing up as well for an hour here.
This is always fun. I love talking to you guys. It's good.
All right. Well, so that's it, guys. As always, remember, the only thing you control is how much you lose. So keep working on risk management, no matter how you're getting into the markets. And other than that, we'll be back next week, same time, same channel. Show up, be there or be square. Follow these guys. Follow their company there at archpublic.com. Follow their company's X at TryArchPublic. And then, of course, as I mentioned at the beginning of the show, Tillman is TexasOL61. And then Andrew is AP_abacus. And, of course, you can follow me at TXWest Capital. And make sure you're following the Forked feed. Make sure you're following it, man. They give you amazing insight into the markets and the best, snarkiest comments and putting people in their place you can get. And by the way, again, as I mentioned, the newsletter goes out daily now. It is done by Fork Feed. So you're going to get a lot of that, what you see on Twitter with the commentary and whatnot. You're going to see a lot of that in that as well. Fork Feed is a Bitcoin maxi, a fiat antagonist. And, if those kind of fit into your feelings there, you should definitely follow along. You'll get a lot of laughs with it. And
as long as the Fork Feed every once in a while throws in a fork you in some of his replies, then I'll be satisfied. I'll definitely follow it.
He might just do it to you, Andrew. He might just do it to you, man.
Right.
Well, we're going to be in, last thing I'll say is Arch Public is sponsoring the Whale Room at the Bitcoin conference this year. So whether you're going to the conference, general admission, industry pass, whale pass, whatever, come see us. Hit us up with a DM. We'd love to meet as many of you as are going to be out there. We're having a little dinner for some of our customers with Scott Melker and John Deaton. So should be a good time, and we'd love to see you there and put a face to a name and build the community a little bit more so we can have a little bit more fun together.
Even if you're not a whale pass holder, because we're taking over the whole whale experience, we're going to have another space that'll be a pretty sizable meeting room there, where we can, even if you don't have a whale pass and you can't spend time with us in the whale room itself, we'll be happy to spend some time with you in our dedicated space that's just for our public in the meeting room there. That's going to have plenty of space. So
I heard you'll have chairs and couches.
We have chairs, couches, water,
coffee. Yeah.
Mm-hmm. Yeah.
Anything you want to keep cool, Richard.
Yeah.
And with that, we are out of here. Y'all have a great week. Trade safe out there. Follow these guys. Follow me. And we'll see you guys next week. Take care, everybody.
Yeah.